We're told that this isn't a recession, but our economy has been contracting for 6 months, and food prices have been rising for 20 months. According to a new Bloomberg forecast, the recession is 100% likely to last into next year, meaning that conditions will continue to deteriorate for about 3 in 4 American households. That's hard to believe, especially considering that almost a quarter of American households have eaten significantly less food since September than they did a month earlier. Researchers found that, compared to last year, current shopping trends showed a stark contrast. Consumers are only buying the necessities and waiting for sales or their next paycheck to be able to buy non-essential items because they can no longer afford to do so when many Americans were panic buying and hoarding food items. In this video, we will talk about Americans will panic if food prices increase by 68% from current level. But before that, please like, subscribe, and click the bell button for the latest economic updates. Now let's get started. According to a recent survey by Morgan Stanley, that represents an almost 10% increase from August, which really highlights how quickly the suffering is spreading across our country. 43% of consumers are having to cut back on purchases of meat in order to make ends meet, choosing generic brands and looking for discounts. Wealthier households aren't immune from the trend either. The share of Americans who earn $100,000 or more now buying less food due to soaring prices hit 19% last month, up 6% from the month before. Meanwhile, 27% of the consumers with annual incomes under $50,000 are also reducing their morning consultations. It's difficult to accept that more economic difficulties are on the horizon for us given all of these sobering statistics, showing that nearly all Americans are experiencing severe financial difficulties that have an impact on their eating habits and food purchases. According to Morgan Stanley research, there is little hope for lower grocery store prices. Analysts and executives at major food producers anticipate an increase in food inflation this winter and into 2023. As we approach the end of the year, they noted, the price of items like pasta and bread are expected to rise by 60% and 40%, respectively. Staples like vegetable oils and wheat and grain-based products are expected to rise by almost 2/3, or around 68%, from current levels. The Ukraine crisis and the worst wheat harvest in nearly 50 years are major factors in the impending price increases, but there are still more. The price of milk, which has already increased by 29.3% over the past year, is anticipated to rise by 10.1%. The price of breakfast cereal, which has already increased by 17%, the price of cheese, which has increased by 10.4%, is anticipated to rise by another 4.2%, and the price of margarine, which has increased by 44%. In the coming weeks, the price of flour and prepared flour mixes, which has already increased by 24.2%, is expected to rise dramatically by 10%. You can record a 22% spike in chicken prices this year. This holiday season has seen yet another significant increase. Families can expect to pay record prices for turkey at the grocery store, according to the American Farm Bureau Federation. However, it's safe to say that nobody could have predicted that the retail price for fresh boneless, skinless turkey breast would increase by 112% in just the past year. This isn't a joke. At the same time in 2021, turkey prices were $3.16 per pound. Today, they're at a record high of $6.70 per pound. I'll say that again, 6.70 spike. Analyst Emily Moquin of Morgan Consult says that once prices reach a certain point, they frequently stay there or increase rather than decline. Several factors have contributed to this, as we reported in numerous of our previous videos. Food industry and agriculture experts are warning that the recent temporary closure of one of America's largest fertilizer production facilities due to Hurricane Ian could lead to yet another increase in grocery store prices. This can sound like storm surge flooding, things that could impact land use whether it's for growing crops. However, it will take some time for those changes to reach consumers. In a Fox Business interview, Jeff Flock stated that food producers aren't seeing any relief from inflation in terms of their labor and commodity costs. He continued, eventually, those things work their way into the ingredient cost and then work their way down through the system to the prices that we see in the grocery store. Market research firm IRI's president of client engagement, KK Davey, the company anticipates a 5 to 10% increase in overall grocery spending next year. Dirk Vanderpoort, CEO of Mondelez, stated that his company anticipates continued high short-term inflation. Oreo and Ritz's manufacturer reported that its transportation, packaging, and raw material costs are still high and announced additional price increases to offset these high costs. The price of ingredients like nuts, fruits, and flavors will increase by 14 to 15% for General Mills' 2023 fiscal year, the company that makes everything from Cheerios to Blue Buffalo pet food announced. You might not be able to rely on any holiday sales this year for manufacturers to increase promotion, as the company plans to introduce additional price hikes for its retail customers this holiday season. Disruptions to the supply chain would need to stop, and costs would need to drop significantly. In the past, consumers might not have noticed higher prices because their wages kept pace with increases. However, that is not the case now, as consumer prices are rising faster than wages are. And what we are actually witnessing is a cost of living crisis, according to CEO Jeff Harmony. The executive emphasized that, regrettably, he is spot on about how the high cost of living in the United States is forcing millions of workers to dip into their savings in order to survive. Since January 2021, monthly savings have decreased by 83%, and inflation has wiped out those savings. Over 2/3 of all Americans are now living paycheck to paycheck, which is a month's worth of wages for half of all American workers. Most Americans are literally teetering on the edge of financial disaster, and it won't take much to push them over the edge, adding insult to injury. According to a Lending Club survey that found that as of September, 63% of Americans were living paycheck to paycheck, up from closer to 57% a year earlier. As new supply chain breakdowns stop the flow of energy supplies in our nation, the already emerging global energy crisis is likely to worsen. According to Bloomberg, new rail and river transportation issues are endangering the country's security of supply, for the barge industry is essential for moving aluminum, petroleum, fertilizer, and coal, particularly on the Mississippi River and its tributaries, according to FreightWave's executive director Rachel Primack. A drought that is still affecting the U.S., the Midwest is drying up the Mississippi River and its river trees, which serve as a crucial freight route for the nation, she noted in a column on the transportation industry website last week. Overall, about 60% of the grain and oil and 60% of the coal and oil are transported by pipeline. Low water levels along the Mississippi make it more expensive and take longer to get food and energy supplies to our distribution terminals. With the cost of transporting those supplies already up by $218, we wonder how much of this increased cost consumers will ultimately absorb. There's also the risk of low water levels along the Mississippi make it more expensive and take longer to get food and energy supplies to our distribution terminals. Given that the cost of transporting those supplies has increased by $218, we wonder how much of this additional cost consumers will ultimately absorb. Similar to what triggered the last big shutdown in 1992, Bloomberg reports that the U.S. supply threat could worsen the global food and energy crisis, which the IMF says may be at least as severe as the impasse that caused social and political unrest in developing nations in 2007 to 2008. As Europe faces a severe energy crisis, as winter approaches, halted or slowed barge traffic is concerning for the entire world. Needless to say, there is never a good time for a transportation crisis, and this is an especially bad time for new supply chain issues to arise. This winter will be unlike any other. Given that 1 in 4 Americans is already behind on their utility bill payments, it is safe to assume that many people won't be able to afford the rising cost of heating, which is expected to reach $1,400 to $1,700 in all regions. So, what's your takeaway from this video? Let us know in the comments section below. If you found this video informative, make sure to hit the like button. Also, subscribe to the channel and press the bell icon to never miss an update from us. Thank you for watching. We'll see you at the next one. Until then, peace.